the tech war to me is very permanent.
With the current geopolitical scenario with US and China strategic play, how is your framework getting built?
We are both betting on China and US being, I think, two of the powerhouses in terms of tax and innovation.
Do you think India is becoming that safe haven for this part of the world to bet on?
People are now finding India as the biggest source of diversification in their portfolio. That diversification is actually being driven by the fact that we're finding the most amount of stability in this part of the world.
How do you see Asia's capital stack regulation?
Tokenization is bringing to the world a more interconnected global financial market or capital market.
But the irony, if you look at statistics, Asia is only 4% of the global secondaries. So we are still in our early days, early innings, but I believe we have bright future going forward.
We have our panelists are ready to go on stage. Perfect. They're here. So Celine and team, please join us on stage.
So I'm back again. We'll bore you for next 25 minutes. Thank you everyone for coming today. I will just take maybe a minute each just to give you a background before I shoot questions to you.
Hi, I'm Matt Halstead. I'm a venture partner with Bitcraft and glad to be here today. I just spent the last 12 years investing on behalf of Texas teachers. So we were one of the largest investment funds in the world in Austin, Texas. I ran a lot of our global real assets and real estate business. And then starting in 2020, built our crypto and digital assets business.
Hi, I'm Rohit Batra. I run a firm called Evolvence Equity Partners. Evolvence is much like Allocator One, a specialized fund of funds focused on India and the Middle East, with a pretty active co-investment program as well. So we manage a little over $1 billion, and yeah, continue to stay very active in that region.
Hi, good afternoon, everyone. My name is Celine. I wear multiple hats, and I think one that I'm most excited about is being able to demand the region for very interesting investments. And I'm also a philanthropist because I think, as we always say, that we have to give back to society. Coming from a business background in renewable energy, as well as in venture capital investments, I think I have the opportunity to connect those bridges together. And as I always say, that we have to make a better footprint when we leave this world. So very excited to have really decent conversation and be part of this PEP.
Hi everyone, I'm David, Singaporean, so welcome to Singapore. I'm with Unigestion, a Swiss asset manager with 15 billion. I'm focused on our investments in Asia, and I do a lot of secondaries in the region. Thanks.
Hi everyone. First of all, thanks Jove and Felix for inviting us. My name is Alex. I'm based between Hong Kong, Singapore, and London. So we are family office allocators. Now the boundary between private equity and VC is a kind of blur. So we generally do more growth cap, focusing on tech, consumer tech, fintech, deep tech, and happy to join discussion.
Thank you everyone. So I'll start with the lady first, Lily. You sit in the middle of Asia's family office ecosystem. You are running your own family office. Where is the family capital going? Where are you investing?
Well, as Asia, we are very family focused, right? So as we always say, you have to help one another. You always will look into how you actually help your businesses to grow. So a lot of the investments aspects will go into our upstream business supports. So this could be anything in the supply chain. But I think been sort of second generation, international generations as well, and I see some knots here amongst my colleagues on the panel, is that we connect the bridges and the dots. We are a global world. We can all sit at the tables of the United Nations and milk it. However, it needs the second gen and third generations to actually conduct the business transaction physically, um, which is having global dialogues, which is also daring and going into markets that nobody has dared to go. If we think of the China market in the 90s, it was almost courageous for Western companies to go into the Chinese markets. However, today, if you didn't go at that time, you had missed the boat. So I highly always say, try to tap into the untapped waters. Try to leverage your network as well. So, I mean, today the people that I had met during the breaks, it's such a nice platform to be exposed. And so, answering your question in short, typically family offices, I find lots of investment that supports their businesses. So, if you come from a family business that is in real estate, you would naturally look into that field. But in addition, having technology nowadays, like for example with Matt on the tech space, you will see how you can leverage the new technologies of also across different regions as well.
Interesting. Adding to, I think, what Celine said, Alex, you've been investing from your family office and you have a multi-family office setup across Asia, globally, direct funds, etc. Uh, and you've been dealing with a lot of ultra HNIs who are adapting the entire current environment. And with the current geopolitical scenario with US and China strategic play, how is your framework is getting built? And are you fully invested in China, moving? I know you invest in US a lot, but or are you rethinking of maybe going further Southeast Asia, India? How are you deciding it?
Well, thanks, Jove. First of all, I'm not diplomatic, so I can't really speak on both sides. But I think from the standpoint of a humble allocator, first of all, I think that trade de-escalation, especially recently, is kind of temporary. But the tech war, to me, is very permanent. I think Felix was just mentioning about the East blocks and the West blocks, right? So to us, we are we are both betting on China and US being, I think, two of the powerhouses in terms of tax and innovation. We are quite agnostic in terms of structure. It could be through a fund, a SPV, but we are more active in the secondary space, as well as in one of the panel speakers who was also talking. To us, we think that in the next decades or so, there will be more opportunities coming up from both sides. As a matter of fact, I think last week Jensen Huang from NVIDIA was giving a speech in Taipei, and one of his points was, I think, the tech war or tech sanctions, whatever from the U.S. administrations actually is they actually drive the biggest national mobilization movements in China in tech, and putting all the resources into tech. I mean, from our perspective, we were quite fortunate. I visited both the California side of the AI, hopefully not a bubble, but the ecosystems, and I visited Chinese ecosystems, speaking of DeepSeeks and other hard tech companies. I firmly believe that we have to bet on both sides. And Singapore, again, I'm Singaporean too, so Singapore is a very nice place, a neutral playground where all of us can talk about geopolitical issues quite openly. But in terms of I think your final question about, I think we're betting on China, and also I think one of the reasons is on exit as well. Hong Kong market, I think a rebound of Hong Kong stock market, and I think there was a lot of secondaries activities in the PE space that certainly paved way for a lot increase in terms of allocations through fund managers. At the same time, Southeast Asia, one of the things which we struggle with is always the DPI and exits. But demographics, I think, certainly bode well for allocations.
Interesting. I think I'll add one more layer to Rohit. Same question, but Evolvence is playing a bigger role in India mid market, and with this current, I will not call it turbulence, but geopolitical era, new chaos or whatever you wanna call it. Do you think India is becoming that safe haven for this part of the world to bet on, and how LPs expectations and viewpoint is evolving as you being an LB in a bunch of funds?
Yeah, I mean, I'll say not only this part of the world, I think globally,
Globally.
I would say that if you think about where are you seeing turbulence from a geopolitical perspective, and I would say variations in regulatory frameworks, uh, whether it's the political sort of propaganda, whether you look at all sorts of I would say polarizations within certain parts of the Western hemisphere. I think that both both regions that we operate in, which is parts of the Middle East, which is the UAE, Saudi, Oman, Kuwait, and India. I think it's a breath of fresh air in terms of the stability that we've been seeing over the last few years. And so, um, if I just track capital flows and I speak to LPs, very frequently, who end up committing globally, and I talk to allocators all the time, and I can tell you that as much as there is this narrative that, the US is leading with the AI sort of story, beyond that, I can tell you that most people are now finding specifically India as the biggest source of diversification in their portfolio. And that diversification, funnily enough, is not from from the perspective of, hey, we're getting access to another part of the world. That diversification is actually being driven by the fact that we're finding the most amount of stability in this part of the world. So it was kind of a little bit, it was almost a revelation. And I spent the last 9 months sort of just scanning globally to see how are people thinking about the region. And yeah, that's pretty much what's coming out of that. And for us as allocators as well, I'll tell you, we've been investing very actively over the last 4 years, both in the Gulf and in India. And I think it's one of the most exciting corridors you can see globally, whether it's the quality of managers, whether it's the quality of underlying portfolio companies. We play a very specific role, which is helping these GPs and these managers access a part of the world which has been very exciting and dynamic, which is the Gulf. And so, to that extent, I think Michael and Felix spoke about that alpha to some extent. That's the alpha we think we can add to this.
David, you've been part of Unigation. You've been advocating about emerging managers. Uh, we 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 met like a month back, going through the entire agenda, and I was telling him, why don't you put up a presentation? He is one of the most beautiful presentations on emerging managers, built by David. Uh, you coming from the Europe and now with Sagard with a Canadian collaboration with Unigation. Over last 12 months, we see Western LPs and Europeans slightly pulling back, and Middle East and Asian are coming up. What do you think, which is driving this rotation from the emerging manager standpoint?
Yeah, thanks, Drew. So I think firstly for emerging managers, it's a super hard fundraising environment. I mean, be it for the established ones, Fund 3, Fund 4, they are also struggling. So firstly, a few statistics. Emerging managers outperform established ones because they have no legacy. It's go big or go home. If Fund 1 goes south, they probably will find another job or retire as a high net worth individual. So I mean, we do see clearly a huge pullback from European and US LPs. But firstly, a lot of first-time funds, their LP base are largely friends and families. You don't really see institutional LPs. Most of the ITST LPs would say, come back to us when you're Fund 2 or Fund 3. In Japan, they say, come back to us when you're Fund 8. So it takes a long time. So for us, we are seeing situations where emerging managers, some are avoiding the blind pool risk. They are doing deal by deal. So raise whatever capital you can for one small deal. You can quickly crystallize your carry within 3 to 4 years, roll up, increase your GP commit, have a few track records and start raising your blind pool fund. So we back Tower Capital here in Southeast Asia. They did 2 deal by deals and then launched their Fund 1 back in 2021, after 3 or 4 years, and they are tracking nicely now. The Middle Eastern have stepped up as well. Evolvence is also pretty active in the region, specifically India, and we see a big white space here. Capital One. I mean, there are not many institutional who can back emerging managers. On top of that, specialists, GPs outperform generalists by 0.4 times MOI. So statistically, if you look back the last 30 years, this is a clear statistics. Because of the deep domain knowledge, the flywheel effect, you just more connected. Your operational advisors, they have the same playbook for the same sectors and thematic. So naturally, they will outperform agnostic one. The challenge about Asia is that the pool here is shallow compared to US and Europe. In US and Europe, I think annually we see around 200 emerging managers. But in Asia, we don't find many specialists, sector specialists, probably strategy specialists like turnaround, buy and build. Um, that's about it.
Interesting. Matt, uh, you come from the digital native background, worked with an institution for the longest time. How do you see Asia's capital stack regulations stack is changing? Now, you being part of this gaming infrastructure with Bitcraft. So, how do you view as a fund, yeah, for the Asian market?
So, with respect to regulations, I think one of the most interesting things that tokenization is bringing to the world is a more interconnected global financial market or capital market, the ability to denominate in dollars or denominate in whatever fiat currency of your choice, and the ability to import contract law that is enforced by code. And so, if you think about the sequencing of how tokenization could impact markets, especially markets that have been more on the periphery of traditional institutional investing, parts of the region in Southeast Asia, I do think that digitally native revenues that are able to port to smart contracts are the most likely to get larger scale adoption by Western investors, just in terms of sequencing. And I think a lot of the challenges to a US based investor, for example, is that they were taking stacked risk from execution risk all the way through FX risk in their investments. That's particularly notable in something like real assets investing or infrastructure investing, where the upside is just much more limited than a venture scale outcome. And it was very hard to feel excited about the vast majority of your investment outcome being derived from FX performance. So if you want to invest in India, you want to invest in Brazil, buy their bonds. Maybe you should not be buying warehouses. I definitely think that that's different in venture. But if we think about where digital assets is bringing us today, I do believe that the ability to customize your capital stack, the ability to select different types of rule of law, that are sort of divorced from where you're domiciled, to me is very interesting. And I think it is bullish for increased adoption and exposure from Western investors to Southeast Asia. And you see a lot of talk about real world assets and the tokenization of things like real estate. I think that's farther on down the line, because I think anytime you're enforcing a contract in the built world, whether that's for equipment, property, whatever it might be, you are still importing that judicial system. You're importing that contract law environment. And that's been a huge challenge for Western investors in parts of Southeast Asia, parts of Latin America, you name it. So while I'm very optimistic on the future of ubiquitous tokenization, I think the venture world, and specifically IP and digitally native revenues, is where it gets a lot more adoption quickly. And I just think liquidity is coming to areas where it was much less common in the past. And that's incredibly bullish for the region.
Interesting. I think there's a question to all of you, in fact, adding to what Matt said. All of you guys raise money, deploy money across jurisdictions. What is that global allocators from a governance standpoint? This is like a red flag. which global allocators underestimate in Asia? What do you guys think? Anyone can take that up. From the governance standpoint, the global allocators, what is the governance red flags which global allocators underestimate in Asia, and they should take care of it or think about it before even thinking of this market?
Maybe I can start.
Yeah.
And I think it's improving. So maybe I'll use as reference point when we started investing in some of these economies, I think 2007 or so. I think board composition is something that over the years we think it's improving, but um, I do feel that, in more established markets, I think when you see the accountability and the heavy lifting that board, especially independent members, have to do, I think it provides a lot of comfort to sort of external stakeholders. I think to that extent, I do feel that that's a governance risk which we've seen, we've seen it dilute over the years, but I will still say that people tend to underestimate just board quality to that extent. I don't know if I was clear, but what I'm trying to say is that boards are extremely, I think, active and highly accountable in more established markets, whereas I think some of the Asian economies kind of need to up their game from that perspective. So yeah.
I want to echo quickly what Matt has been saying on the tech adoption and the digital asset and tokenization of assets. One thing I believe no nation has the courage to do so far is the adoption of stablecoins and the fiat and cryptocurrency conversion. Let me call it governance and liberty to be bold in a region to do the first step. We all have followed the whole crypto adoption. Who would have been bought some crypto back in 2009 would have been very happy. Now the actual is what, 102,000 K USD per Bitcoin? Would have been nice back then, right? If we all joined it. However, being very proud soon living in the region here in Singapore, Singapore is famous to be known as an acronym of Singapore Inc. This company is run as a company. What is it when you run a company? I have to set up a strategy to make my company future proof. If we look into the adoption on the European MiCA tokenization asset law, Singapore is actually following those footsteps. So what do? I look into other regions and I'm going to adapt what's working in order to bring my small nation forward. Cryptocurrency, of course, comes with an interesting connotation of money laundering. Where does the money being used? However, now the usage is so widely spread that you can't actually completely forget about it and not overlooked it, right? So again, I think today's my word is courage. I'm lacking one nation in this region to take the courage to come up with the stablecoin official exchange or handling of that. Right.
Yeah, I would say you can take the lead, or the option will be dictated to you by the market, is my opinion. I think the key thing to think about with respect to tokenization is that it is a machine legible data standard. And that standard can be used to express ownership of any variety of things. Some of those is a sovereign currency. It could be equity in a startup. It could be an intangible asset. But I think the big risk for laggards in terms of accepting the future of technological progress in fintech, which I believe tokenization is inevitable, is that the market will provide a substitute for your currency. And once that has been forced and adopted by your population, I think that's a very tough spot. So I would not want to be a laggard in that regard, or you will find that the way your population is transacting is now out of your control. And to rein that back in is a challenging dynamic. But to one more thing that you asked with respect to where the East is positioned, I think there's a lot of innovation that was covered in the earlier slides with respect to technical advances in automation applied to the built world. And I think that's phenomenal. And I think that is recognized by the West. But I also think the exporting of Asian culture is an absolutely massive trend that has begun. And you look at China, Korea, Japan, India, I think we're at the very early stages of Asian cultural dominance. becoming a global phenomenon with respect to entertainment. And that is one of the areas that I'm most excited in investing in because I think it is much more easy to access using technology. And I really think that Asia is incredibly well positioned for something that is going to be, um, yeah, just absolutely a global phenomenon.
No, thank you. This is very interesting. Adding to, I think it is for Celine and Alex. Anyone can take it up. Family offices globally, but yeah, let's talk about Asia. Still behaving as passive LPs or creating syndicates or how they're actively involved now, or it's still way to go. I know Alex does both. So
And thanks for the question. I think it's very hard to answer that. But
what's working?
yeah, I would say that generally, I mean, also according to your previous question, to me, I think Asia is like this. It's very heterogeneous in nature, right? I think you have 1.4 billion people in China, 1.5 or 1.6 billion in India. Southeast Asia has about 700 million people, and there are so many languages, cultures, and etc. I think Asia itself is very heterogeneous. So in the capital side or asset side, you have to. I mean, we firmly believe that we are just like one of the humble ones allocating capital, but Asian, there's no such word called Asian capital, right? Because each country, depending on the family background, depending on the allocator's preference, it will be very, very different. I would think that in terms of structure, or we are rather more flexible or agnostic. That also because of the currently, I think, like in previous slides, you also mentioned, now every company is an AI company, right? And some of the AI company especially from California, that normally start with a billion valuation in a Series A. So the boundary between PE VC is getting blurred. Also, David said, I think emerging managers are getting more and more difficult for them to raise capital, whereas the big ones are actually taking all the liquidities from private rounds. Now you have a rounds which each VCs can commit 5 to 10 billion in each rounds, right? Which make it very unfriendly for other VCs and also from allocator standpoint. But overall, I think what we try to do is definitely find opportunities that fits our risk profile, whereas we respect and appreciate the nature of being living in a very heterogeneous kind of culture, environment, and region. Like I said, when we look at emerging managers, I was quite fortunate that I actually just come back from Philippines with another emerging managers sitting in the back, having their retreats called Raise the Capital, and we were discussing about emerging managers and managers that are focusing on emerging markets. It's getting very, very difficult for smaller managers to play. Whereas we have to acknowledge that, for example, there's no African fund, right? You have to be very specific in what you're looking at. In the regions which we are currently present, I think we look at rapid urbanizations, the rising middle class, as well as very accelerated kind of digital adoption. As long as you pick your thing, and we can be agnostic in terms of entry point structures, etc. Total capital, we also take a look as well. I think it could be a single deal, it could be a co-investment, it could be a fund structure, or it could be more innovative. Thanks to the guys saying you're proposing more innovative solutions, promoting them in the region. So we are constantly learning and adopting. There was no fixed way, but at the same time, we have to acknowledge that I think the markets are very, very different from each other.
Interesting. Before I let you guys go, I have one prompt question. Everyone has to answer that. Uh, where are you investing right now? Like what sector? What is more most exciting for you? What are you looking forward to? I know David has some 3 IPOs coming up in next. Already done one, and I think two more in couple of weeks. But yeah, anything. What are you excited about? Where are you investing?
Right. I
Give
tell you
give
what.
give these signals to the audience so they can also go invest.
Okay. Well, again, since I'm a philanthropist, I often believe in new technologies for climate change and sustainability. But then again, there's a lot of greenwashing, right? So I always encourage people to really look at the nature of tech, because everything is always like Uber, and that gets another ticket quickly. And as I always say, with great power comes great responsibility. And I wish that came from Shakespeare, but everybody knows it comes from Spider-Man. Diversification for sure. And also, when you look at investment, the geopolitical stability of the nature of that particular investment, right? Things can happen overnight. So being very mindful about that.
Yeah, at Bitcraft, we're investing in gaming and interactive entertainment, the hardware that empowers these games, and then applied game mechanics, bridging audiences uh, and the creators. And we're taking a stage agnostic view, bread and butter being early stage, but all the way through late stage, really credit based user acquisition strategies, trying to find out where our expertise in the category can lead to excellence and risk adjusted returns. So very broad. Started a business in India this year, started a business in late stage user acquisition financing this year, but it's a global view. And then myself personally, leaving Texas Teachers, I'm focused on building a business. Kind of the next speaker is talking about this, where technology companies are now building products and services in the built world. We're reindustrializing America. My view is Austin, Texas will lead that, and I'm starting a company to build that space.
Yeah, I mean, look, I know the forum today is indexed towards tech and VC, but we invest across private markets, which include some of the boring stuff like buyouts and mid-market growth. We think the opportunity there is pretty compelling. I mean, look, it's sort of shaving against the grain to some extent, but in India, at least, we're seeing some very interesting dislocation in prices. It's just the fact that there's no capital availability. These are sound businesses. Many of them, I think there is a narrative around disruption from AI, but I do feel it's a little overblown. So we've been able to, I think, we're over indexing across some of those assets. We just backed India's first lower mid market buyout buyout fund, which is a roll up strategy, which you see in the US a lot. And this manager is essentially doing that. Is they'll set up a platform and then do a bunch of duck in acquisitions of boring, very services based businesses and then create a platform around it. So yeah, so things like that. The other in tech, what we are spending time on, and I think you mentioned as well, is just we're doing a lot of secondaries. So to the extent that you do have, this is a this is an ecosystem where LPs are clearly DPI starved, and so I think Indians always had resistance to selling, and to that extent, that market has matured. And so we are stepping in and trying to see if we can provide liquidity to some of the early stage funds and come into companies which are a little more mature and a path to a liquidity event. So yeah.
David?
So I have a little secret to share. We are in Asia, and in Asia we love spices. So if you are looking for triple alpha, look for an emerging manager in the emerging markets with emerging currencies plus emerging strategy, which is venture. So, it might be too risky for some. So beware what you wish for. And then second, I love secondaries and I'm biased. And secondaries, we only move when we smell blood. So for the GPs, they don't like to bleed, but it's always a waiting game. So the battle between price and war. But the irony, if you look at statistics, Asia is only 4% of the global secondaries. So we are still in our early days, early innings. But I believe we have a, bright future going forward.
First of all, before answering your question, I think that he's absolutely right. I think we did a big VCS deal, which was on Bloomberg, and we're quite fortunate. We think in Asia, both PES and VCS, regardless of GP-led or LP-led, this growing uprising area, which we focus. On the what we are looking at the moment, we are very worried about the aware and worried about AI overvaluation, right? Because now I think it's hundreds of billions for every company to be looking at. So we are betting on sports. We think sports is a very good hedge, statistically speaking, as well, versus AI. So hopefully there's not, but if there's a big correction in Nasdaq or AI valuations, we think people will still be entertaining themselves with movies, with rising Asian culture, but watching sports, drinking beer, and etc. That's our base case. So we deploy a lot into sports.
Perfect. Thank you so much. Thank you, everyone.